Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 19th, 2024. And our relatively contrarian read on the Bitcoin chart has been proven correct. Okay? Most people, at least most public crypto technicians, crypto sort of traders who have a voice in the space, have been calling this a bullish breakout. And it's very clear that if it were a bullish breakout, it would have broken out by now. And it doesn't look like a bullish breakout. I'm going to explain why. Technically, it doesn't look like a bullish breakout. It doesn't look like a sort of ascending triangle. It's more like a rising wedge, and that's a bearish pattern. It breaks down more often than not. I'm also going to talk about my target for Bitcoin when it does fall, and how I think it will fall, and why I don't believe that this is the end of the bull market. The bull market hasn't even started. It's just the beginning. So I'm going to get into all that and more. If that sounds interesting to you, then watch until the very end. Thank you all for supporting me, and welcome to the new subscribers. Let's get right into it. All right. Like I was saying in the introduction, this to me is very clearly not a rising or ascending triangle. And for those of you who don't know what that means, I'm going to show you really quickly. So a lot of people, and if you're new to crypto, if you're new to the space, you may think, well, I saw that guy on Twitter, or I saw that guy on YouTube, and they have so many followers, they have a nice car, they made a lot of money, I saw a screenshot of their P&L, they must know what they're doing. Not true. You can be a horrible trader, get in when everything is impulsive during a bull market, and do amazingly well and not know shit about technical analysis. This happens more often than you think. In any case, the take home, or the conclusion, the lesson is, do your own research, study, try to educate yourselves as to what you're looking at if you're charting, and make your own decisions. No crypto YouTuber, no influencer should be telling you what to do. They may influence you, they may inform you, but at the end of the day, you have to do your own research, because myself included, we all make mistakes. Okay, but I mean, just the level of ineptitude that's out there in reading this chart is gobsmacking. Like, it's insane how many people can't read a chart to save their lives. Okay, so I was talking about an ascending triangle, which is a bullish continuation pattern. If you see something like this, that's a bullish continuation pattern to the left. If you see something like that to the right, that's typically going to be a bearish reversal. Okay, and so when you look at Bitcoin's chart, I think it's quite clear that it's been in a rising wedge. Okay, and the tell for me, I'm not a big pattern analysis guy. You guys know me if you're subscribed. You know that I'm first and foremost an Elliotician. So the tell for me was, one, that on the high time frames, we hit our target. Okay, we said the target was 90 to 92. Sorry, 1 second. My pen is acting up again. So if you look, you have this right here, which is a bullish reversal pattern. It's a big W, and you broke out and you hit the target. Okay, that's essentially, or sorry. The target wasn't the W or bullish reversal pattern. The target was the descending broadening wedge. Okay, and that was the first pattern that you created. I'm sorry, my pen has stopped working, so I'm gonna draw with my mouse, which is a bit goofy, so excuse it. So you take the height of the descending broadening wedge, superimpose it from the site of breakout. That's how you get your pattern target. Okay, so once we hit that, that was my first clue. Okay, get out of Dodge. like don't expect any further increase. Now, for people who also understand that breaking this top right here, this resistance, I'm sorry. My pen not working is obnoxious because I can't draw the pretty pictures I like to draw. You can see this resistance. This channel, this blue channel that I've got on this chart is many years old. It's a couple, 2 to 3 years old. In any case, the idea of breaking a high time frame resistance and just continuing to go is unrealistic. Again, a lot of people clearly don't look at charts, clearly aren't serious chartists, because anybody who looks at charts and understands how support and resistance works, no, you don't just break resistance and keep on going. If it's a true breakout, you always retest previous resistance as new support, right? That's a founding principle or a basic principle in technical analysis. So you're expecting for so many reasons to come back. The other reason is there's a huge CME gap, Chicago Mercantile Exchange gap, because Bitcoin pumped on a weekend when it pumped on a weekend, and then on a holiday. I remember it was Saturday, Sunday, and then Monday was a holiday. I forget which holiday, but essentially, why is that important? Because whenever Bitcoin pumps on a weekend, that means that the US dollar currency index, that sort of is the liquidity to any risk on asset pump, doesn't act, and that creates a gap, and those gaps are always filled. Now, you don't have to fill them immediately, but if we're really breaking out, there's no reason we're coming back to these levels, right? So the idea of coming back is normal and natural because we have a big, massive CME gap down here. Those of you who know anything about CME gaps know what I'm talking about. And, you know, it's just disingenuous that a lot of technical analysts, as they call themselves, or YouTube influencers, Twitter influencers, know everything about CME gaps, and they completely ignore the big, humongous CME gap around 75 to 85, I think it is, or from 75 up to where we're at right now, and then they'll tell you about the gaps up top. It doesn't make any sense. So this is why, do your own research, and I won't say that all these people don't know what they're doing. Some of them, there are more nefarious purposes that they're trying to get you to buy the top, literally, the Pico top. Okay. So that's what I'm seeing on the Bitcoin chart. That's why I'm seeing it. Let's go back to the small time frames and excuse me. I think it's quite clear when you're looking at the chart here that you're dealing with a rising wedge, which is a bearish reversal pattern. And if it were a rising ascending triangle, right, there would be a very nice flat resistance here and a clear test, multiple clear tests of that resistance, and then it breaks, right? You see that all the time in bullish continuations. That's a type of wedge breakout where you get that wedge usually in wave 4, right? For us Elioticians, we know you only get those wedges in wave 4. But this is dirty, and it's so dirty for me. You know, this clearly was the initial break of structure. I knew it was an initial break of structure and not an intra-wave correction because we hit the target, as I said, on the high time frame, right? Our target was 90 to 92. We hit our target. So any break of structure, and what is a break of structure? A break of structure is any retracement beyond the 0.618 or phi ratio, okay? Because according to Elliott wave theory, you can't retrace in an impulse below 0.618, okay? That basically, the trend is called off. So basically you're breaking trend. So that's why we call it an initial break of structure, because it's the first time you broke trend right here. So I started counting my corrective patterns here, and I knew at some point in time you were going to get something like this, right? Because you always have to retest the highs a few times. And what you're going to do is, this is actually quite expected because it's what we call a spring in Wyckoff analysis. You know, you pretty much are in a Wyckoff distribution, testing the highs. You go above, you make a higher high, and people who don't know much about, what's going on are going to buy at this point, and they're even going to buy at this point. And so that's extra liquidity for the market, which the market loves. And then it comes back on them, does a swing failure pattern, right? And comes all the way down here, and then you do that, something like that. And that's the start of your impulse down, okay? So that's what I'm seeing on the Bitcoin chart. And at the end of the day, on the high time frame, what it's going to look like more often than not is this. It's really easy to read on the high time frame, harder to read, one, when you're in the trade and you're emotionally invested, and two, on the smaller time frames where it seems very noisy. Okay, so on the high time frame, what does it look like? It looks like an impulse, A, B, C correction right there. That's all it looks like, right? But again, on the small time frames, you don't see this A, B, C. You just see a bunch of, oh, it's going to break out. No, it's not going to break out. Oh, it's going to break out. No, it's not going to break out. But that's essentially what it looks like. And this understanding I've acquired through experience, through myself being invested, through myself buying the Pico top, through myself mistaking this for an ascending triangle, through, a lot of money lost in trades, a lot of time looking at charts, hoping it's going to do one thing when it does something else. So, there's no sort of other way around it. But in any case, let's move on to, okay, let's accept the fact that Bitcoin is in a bearish pattern and it's likely going to retrace. I see some people conceding that, maybe Bitcoin may put in a modest retracement. Some of these influencers have the gall to say, I told you guys, don't buy green candles, buy red candles. Like, 24 hours prior, they were telling you, go all in. This is your last chance. And if you're not buying right now, you're doing it all wrong and stuff like that. In any case, they're talking about a 10% retracement, some modest retracement. No. And I'm going to tell you why this target, I'm going to tell you, for Bitcoin is a high probability target. This target right here, this red rectangle at around 71K is a high probability target. If Bitcoin goes there, it will represent a 20% declension, a 20% drop, okay? A lot of people who know shit all about technical analysis are going to say it's over. I knew it. It's the end of the bull market. We had our last chance. Crypto's finished. Oh, it's a black swan because somebody opened some investigation into Trump or the election or something like that. Don't believe any of that. Understand that this is a normal and natural retest of previous resistance. Again, these are basic principles. Like, if you're teaching technical analysis 101, this is one of the first things you learn in support and resistance. And that is that when you create, come on, pen. I'm sorry, let me try my pen. Oh, you know what? I think I know what. Okay, I got my pen back. All right, so this is why this is a normal and natural and high probability target for Bitcoin. Because it was resistance for about 7 months. And if you look, I know we talked about the descending broadening wedge right here that gave us this target, but another pattern that we created was a very uniform, very nice, clean inverse head and shoulders. You can call it an inverse head and shoulders, you can call it a bullish reversal pattern, but it's quite clear here. You have your left, right, and head, right? These are bullish reversal patterns. It doesn't matter what you call it, W, a cup in hand, it doesn't matter. The important thing is, it's a rounded bottom denoting an extremity, and there's a breakout, there's a neckline, a point of resistance or support, or a level of resistance and support, and a breakout of that, okay? And it doesn't matter what timeline or what time, excuse me, what time frame you look at these patterns on. Invariably, what happens is they break out, they retest, and then they break out. It could be on the 5-minute time frame, it could be on the 5-hour time frame, it could be on the 5-day time frame. So why should we expect anything less? And I understand people are emotionally invested. The other thing you need to understand and know, and it's normal. The first pump into all-time high always is followed by massive profit taking. And why wouldn't it be? Literally everybody who's ever bought Bitcoin is ever in the history of Bitcoin is in profit, because quite by definition you're at all-time high. So we've never gone to these levels. So some people are going to take profit. A lot of people are going to take profit. That always results in a pullback. Sometimes that pullback is modest. Sometimes it's more, serious. But if you get big moves up, you get big moves down. People don't understand that. And the idea that we're going to pump in a straight line is inane. It's absurd. It's like nothing moves in a straight line, right? That's why you have motive waves in five waves, basic Elliott wave theory. So, there's a lot of people you all should ignore or straight up just block after this whole fiasco, because people are telling on themselves just how little they know about basic standard chart analysis. Okay, so it's very likely that this resistance of this inverse head and shoulders, this bullish reversal pattern, which created our breakout, serves as a retest. Very normal and natural. And this, my friends, is the beginning of the bull run. That retest right there. It's not the end, it's the beginning. Because anytime you look at a pattern breakout, you get a breakout, a retest, and then an actual breakout. The actual breakout is where you really get your breakout, and that's where you really want to buy. Okay, it's fine to buy on the breakout, but the breakout's tricky and it's corrective in nature. And the only reason it can come back upon itself so much, right? People are going to say, oh, we retraced too much. There's no way the bull run can continue. That's bullshit. That's just what these breakouts do. The initial breakout is always corrective in nature. If it weren't, then the retest would respect the phi ratio, the 0.618, right? It would retest down here. But because it's, that's just what happens, it comes all the way back down. And in coming back down here, you both retest this resistance, now flip it as support, and the midline of this multi-year channel. And if you're new to the channel, I always say that channel trading, you have 3 aspects. You have the support, the resistance, and the midline. Very few people talk about the midline. The midline is just as important as the support and resistance. The midline needs to be retested before leaving the boundaries of the channel. So I think that's a high probability retest at 71K. Once again, that's a 20% declension in Bitcoin. If Bitcoin goes down 20%, imagine what altcoins do, right? So ADA, for instance, XRP, very liable to go down 50%, but that's after having pumped 100%, 100+%. So that's what I'm seeing. And then I told you, this is how I'm seeing it. Don't be surprised, because again, this move up is very likely a flat correction if you look at it in its entirety, and this right here is the impulsive portion of that flat correction. A flat correction, for those of you who don't know, is an A, B, C corrective pattern in Elliott wave theory. The move down, also A, B, C, it can flash crash. This is why I said flash crash in two videos prior. Don't be surprised if that 20% happens in an hour, in 15 minutes. It can happen like that. And actually expect it to happen faster than not. Why? Because not everybody, but a lot of people are buying the top. A lot of people are longing the top. And when they're longing it, they're setting stops below this pattern, okay? Because they think this is an ascending triangle, so they're safe with their stops below. Some people think they're safe with their stops down here. So basically, it's going to be a cascade of liquidations, whereby once the price moves, the lower it goes, it's going to force people to sell who have their stops down here below this pattern. And as they're forced to sell, the price is going to accelerate down and hit more stops until it reaches its point of support. So that I don't expect this to take too long. What's going to take some time is always the preparation for the drop and then the reaccumulation for the pump. But that's what I'm seeing. It's going to likely be a cascade of liquidations down to our 71K level. And remember, you're not only retesting the midline of this multi-year channel, you're retesting the neckline of this 7-month inverse head and shoulders. You're also filling a massive CME gap over here, because that pump happened on the weekend and then into Sunday, which was a holiday where the US dollar currency index didn't trade. And these are all basic tenets of technical analysis that, any serious analyst should know, but there are a lot of unserious analysts out there, so just be careful who you listen to. Don't trust others, trust yourselves. There's a lot of good literature out there. Just do your research, and hopefully you've prepared in the bear market for this bull market that's to come. And, we're going to do great things. Price is going to rally and pump in ways we've never seen, or at least haven't seen in years, because the characteristic of the price action in a bull market is, it's been so long I haven't seen it with my own eyes and felt it, the emotions that you feel. Like, you go up sometimes hundreds of percent in a day. Sometimes, depending on the asset, the price just pumps and pumps and pumps. You go to sleep, you wake up with the 10x or 5x or 3x. It's beautiful. That hasn't happened yet in the market at large, obviously with some isolated assets here and there. But yeah, that's what I'm seeing on the charts. That's why I'm seeing it. I don't want to make this video too long, so I'm not going to talk about altcoins right now. But, Bitcoin first and foremost. Let Bitcoin do its retracement down to 71K, then we can start talking about altcoins. Last thing I want to say is look at the one indicator that I like to use, which is the stochastic RSI, the relative strength index, right, which is a momentum indicator. If you go on the 4-hourly time frame, which I'm at, you can see you're about to cross bearish on the 4-hourly time frame. On the hourly or on the 4-hourly, and you're already cross bearish on the hourly, and on the daily you're topped out and you're cross bearish. On the weekly you're completely topped out. So there's nothing really bullish about this in so many ways. Obviously, in a proper bull market, momentum can look bearish and it can still pump, but you have to take it in context. So in context of everything I just said, it very much looks like we are going to retrace that 20% down to the 71K level. Guys, if you got value, please like, share, and subscribe. Consider buying me a coffee at the pinned comment below. And new subscribers, welcome. Hopefully we can make a lot of money this bull run. Take care. Bye.